All right, let's talk about Shopify. You know them, right? They're the engine behind millions and millions of online businesses. But have you ever stopped to wonder how a giant like that actually makes its money? We're going to decode it.
And that's really the big question, isn't it? You might think, oh, it's just the monthly fee that store owners pay. But, that's only a tiny piece of a much, much bigger and honestly way more interesting story. We're going to pull back the curtain on their entire business model.
Okay, so to really get how Shopify's money machine works, you've got to understand that it's powered by two totally distinct but connected engines. These two streams are the foundation for, well, everything they do. Now, this is where it gets good. Think about it like this. Subscription solutions are kind of like the monthly rent a shop owner pays for their digital storefront. It's stable, it's predictable, it comes in every month. Merchant solutions, on the other hand, that's the accelerator. That's like all the fees for the powerful tools inside the store. The payment processor, the shipping station, even the office for business loans. The more stuff a merchant sells, the more that side of the business just explodes. So let's zoom in on subscription solutions for a sec. This is the bedrock, right? This bucket includes all those basic monthly plans that get a new business online. It's also the software for their physical point-of-sale systems in retail stores. And it includes the super high-powered Shopify Plus plans for absolute giants like Skims and Supreme. This gives Shopify a really reliable recurring baseline of cash flow, month in and month out. And then you have this beast, Merchant Solutions. This is where the game totally changes. Instead of just a flat fee, this revenue is directly tied to a merchant's success. Specifically, their gross merchandise volume, or GMV. That's just the total value of everything they sell. So the more a store sells, the more Shopify makes through things like Shopify payments, shipping labels, even business loans. It's a simple, brilliant formula. When the merchants win, Shopify wins big. Now, you might think these two engines are pretty evenly matched, right? But that's not the case at all. In fact, in just the last few years, one has started to completely, and I mean completely, dominate the other, and it's fundamentally changed Shopify's financial DNA. Let's take a look. And boom, this chart just says it all. I mean, look at these numbers from their own reports. In 2022, Merchant Solutions revenue was already nearly 3 times bigger than subscriptions. That's a huge gap. But then, fast forward just 1 year to 2023, and that gap has become a canyon. Merchant Solutions grew by over $1 billion and now makes up the vast, vast majority of Shopify's total revenue. The accelerator isn't just an accelerator anymore, it's the main engine. So, what's the big deal? Why does this massive shift matter so much? Well, this quote from Shopify's own management team tells you everything you need to know. Sure, they might make a smaller percentage of profit on each payment they process compared to a subscription fee. But, and this is the key, these merchant solutions are incredibly efficient to scale. They don't need a giant sales team or huge R&D budgets. As merchants sell more, this high-volume, lower-margin business just prints money for the bottom line. It's all about scalable efficiency. And that exact focus, that relentless focus on scalable efficiency, is what drove a massive, absolutely huge strategic pivot in 2023. It's a move that tells us exactly where the company is headed, and maybe more importantly, what it's deciding not to be. Okay, so for a few years, Shopify went all in on physical logistics. I mean, they were buying robotics companies, fulfillment networks. They were trying to build a direct competitor to Amazon's shipping empire. It was this huge, expensive bet to control everything from the moment you click buy to the package landing on your doorstep. But then, in the middle of 2023, they did a complete 180. They sold it all off. But they didn't just walk away empty-handed. In exchange for all those logistics assets, Shopify got a 13% equity stake in the company that bought them, Flexport. So what did that really do? It let them offload the insane costs and complexity of running warehouses and delivery fleets, and instead, they turned a potential competitor into a major partner that they now own a piece of. Pretty smart. And look, the message here is crystal clear. By selling its logistics arm, Shopify planted a flag and declared its identity. It's not about owning trucks and warehouses anymore. Its real mission is to build the software, the payment rails, and the financial tools that power commerce. It's a classic asset-light strategy, and it lets them double down on what they do best. So, with all that physical logistics stuff off their plate, where is all that focus, all that capital going now? The answer couldn't be clearer. They are betting everything, and I mean everything, on becoming the financial operating system for their merchants. This right here, this is the future. And it's not just about adding a few new features. It's about solving the biggest, most annoying headaches for entrepreneurs. Think about it.
Markets Pro takes away the nightmare of international taxes. Shopify Capital gives you funding in a few clicks, something that's nearly impossible with a traditional bank. And Shopify Credit? It's a business card built right into the dashboard they already live in every single day. See the pattern? These are all financial services. Here's the core insight. Shopify is basically transforming from a software company into a fintech company that's just disguised as an e-commerce platform.
So, let's put it all together. What does this all mean for the future? As we look ahead to 2025 and beyond, what is Shopify actually becoming? It's been one heck of a transformation.
You can really break their whole journey down into 3 clear phases. First, they were just a store builder, giving you the basic tools to get online. Then, they grew into a true commerce platform, connecting your website, mobile app, and physical stores. But now, they are deep in phase 3, becoming the indispensable commerce operating system. They don't just want to be the place where you sell. They want to be how you get paid, how you get funded, and how you manage every dollar of your business. So why does this matter so much? Because the way we measure Shopify's success has completely changed. It's not just about the raw number of merchants on the platform anymore. The real growth, the real value, is going to come from how deeply they can integrate these financial services into each and every one of those merchants. Their future is now completely tied to the transaction volume and financial health of their existing customer base. And that leaves us with one final, kind of provocative thought. When you look at the pivot away from logistics and this massive doubling down on financial products, you just have to ask, right? Is Shopify's true destiny still just e-commerce? Or is it slowly transforming into something that looks a whole lot more like a modern bank, built from the ground up for the next generation of entrepreneurs? That's the question that's going to define their next chapter.